Buying a house is one of the biggest dreams for many, but it can quickly turn into a financial nightmare if you don't know exactly how much you can afford. It's not just about getting excited over those perfect listings. Your salary needs to support that decision. And it's not just about the home price. There's a lot more at play. Have you thought about the interest rates, fees, and unexpected expenses that pop up when you least expect them? The truth is, most people buy way more than they can realistically handle, ending up trapped in debt with little room to breathe. But what if I told you there's a simple way to figure out exactly how much house you can afford, without all the stress? The answer isn't just about your salary. It's about understanding the rules that banks and lenders use to decide what's truly affordable for you. Here's the game changer. Knowing these rules gives you the power to make smart choices that fit your budget without sacrificing your other life goals. So, if you're tired of feeling lost and want to discover how to make a wise purchase that aligns with your income and needs, you're in the right place. We're going to dive deep into this topic and show you once and for all how to calculate what you can really afford when it comes to buying a house. Don't worry, it's straightforward with practical examples, and by the end, you'll have a clarity few people get on this subject. Let's get started. Before we continue, like us and leave a like. This helps us identify if you are enjoying our content and encourages us to produce more of it. When it comes to buying a home, knowing the income required can feel like navigating a maze. Lenders usually look at your income, credit score, and debts before they even think about approving a loan. But here's the catch. What you earn isn't the only factor. Interest rates, often seen as the hidden villain, can dramatically change how much you actually need to bring home each month to afford that dream house. For example, if rates are high, a home priced at $300,000 might suddenly feel like a $400,000 property. It's crucial to understand that these little percentages aren't so little when you factor in the long-term impact on affordability. Speaking of affordability, let's not forget that lender guidelines are like the rulebook in a game you didn't know you were playing. Lenders typically set a cap on how much of your income should go toward mortgage payments, usually around 28% of your gross income. But here's a secret most don't tell you. Even if you qualify for a loan, that doesn't always mean you can truly afford it. Imagine you've saved up, your credit score is solid, and then you find out that monthly property taxes and homeowners insurance add hundreds more to your bill. It's these hidden costs that often push potential buyers to reconsider their options. It's all about balancing your dreams with reality. The goal isn't just to get approved. It's to maintain a lifestyle that doesn't have you living paycheck to paycheck. One smart move is to keep a cushion, ensuring you're not stretched thin after making that down payment. So, while you might qualify on paper, think practically. Can your current income handle not just the mortgage, but also unexpected repairs and rising utility costs? Keep this in mind as we explore the real differences between renting and buying. It's not just about numbers, but about making a choice that keeps your financial health intact. Renting and buying a home are two sides of the same coin, but they come with completely different experiences and responsibilities. Renting often feels like the simpler option. There's no property tax, no major repairs, and when the lease is up, you can pack your bags and go. But owning a home? That's a whole different story. It's not just about paying the mortgage. It's about covering unexpected expenses like a broken water heater or roof repairs. Homeowners insurance, property taxes, and maintenance costs can sneak up on you, adding hundreds, if not thousands, to your annual budget. Now, some might argue that owning a home is an investment. And sure, there's truth to that. Property values can appreciate, and you build equity with every payment. But let's not sugarcoat it. Homeownership also ties you down. You can't just up and leave when the neighborhood vibe changes or when a better job opportunity comes knocking across the country. Renters, on the other hand, have that flexibility, which can be invaluable, especially in uncertain times. It's a choice that goes beyond just money. It's about lifestyle and the kind of freedom you want in your daily life. So, how do you decide which path is right for you? Consider your financial situation, but also your long-term goals. Are you ready to commit to a specific location and the responsibilities that come with it? Or does the idea of calling your landlord when something breaks sound like a better deal? As we move forward, we'll look at rent affordability rules that can help guide your decision, making sure your housing costs fit comfortably within your overall financial picture. Renting might seem like the safer option, but it comes with its own set of rules that can make or break your budget. The traditional guideline suggests that rent should take up no more than 30% of your gross income. Sounds simple, right? But in today's world, where costs are rising faster than paychecks, even that 30% rule feels like a stretch for many. Newer guidelines suggest adjusting that percentage based on your total living expenses and savings goals. Imagine setting aside a portion for an emergency fund while still managing to pay rent. That's the real challenge. It's all about balance. If you're spending half your income on rent, that leaves little room for everything else, like saving for retirement, traveling, or even just enjoying a night out without guilt. For instance, if your income is $4,000 a month, the ideal rent would be $1,200 or less. But how many places in desirable locations fit that budget nowadays? This is where you have to be strategic. Sometimes, finding a roommate or looking slightly outside the city center can save you hundreds and still keep your financial plans on track. The key takeaway? Rent within your means, but also keep future goals in mind. It's not just about finding a roof over your head. It's about having enough left over to build a stable financial future. Don't let rent eat up your dreams. Adjust, plan, and make sure your housing choice aligns with the life you're aiming to create. Up next, we'll dive into mortgage affordability rules, exploring how much of your income should go toward a home loan and why having some savings is crucial. When it comes to buying a home, understanding mortgage affordability is like having a cheat sheet to financial stability. Lenders often follow the 20/28 and 30/33 rules, fancy numbers that boil down to how much of your income should go toward housing costs. The 20/28 rule suggests that no more than 28% of your gross monthly income should be used for mortgage payments, while 30/33 includes other housing expenses like taxes and insurance. It's about striking the right balance between having a home and still living comfortably. But sticking to these rules isn't always easy, especially when the market is hot and prices are sky high. Imagine you're eyeing a $400,000 home and the bank says you qualify. But should you really stretch your budget to the max? It's tempting, but it's crucial to leave room for unexpected expenses, like a sudden car repair or medical bill. The goal isn't just to own a home, it's to keep it without feeling financially squeezed every month. Having enough savings is equally important. A good rule of thumb is to have at least 3 to 6 months of living expenses saved before taking the plunge into homeownership. This buffer can be a lifesaver, ensuring that one unexpected expense doesn't derail your entire financial plan. Next, we'll look at how lenders determine what you can borrow and why keeping your debt low is key to maximizing your home buying power. Lenders have their own secret formula when deciding how much they're willing to lend you, and it's all about your income, debts, and that magic number called the debt-to-income (DTI) ratio. The lower your DTI, the more attractive you are as a borrower. Imagine two friends, one with credit card debt and student loans, and another with no debts at all. Guess who's getting the better loan offer? Keeping a low debt profile isn't just good advice. It's a ticket to better rates and bigger borrowing power. But it's not just about having low debt. Lenders also dig deep into your credit history, looking for any red flags like late payments or defaults. Even a small hiccup on your credit report can affect the loan amount and the interest rate you're offered. For example, someone with a stellar credit score might get approved for a 3.5% rate, while another with a few missed payments might be stuck with 5%. That might not sound like much, but over a 30-year mortgage, it adds up to tens of thousands of dollars. Understanding lender requirements can feel like trying to crack a code, but it's worth it. Maintaining a healthy balance between income and debt is your golden ticket to securing the best loan terms. And remember, lenders aren't just looking at your present, they're forecasting your financial future. Up next, we'll explore when renting might actually be the smarter move, especially when the market seems stacked against buyers. Deciding between renting and buying isn't just a financial choice, it's a lifestyle decision. In a market where home prices and interest rates are soaring, renting can often make more sense, especially if you value flexibility. Think about it. Buying ties you down, not just to a location, but to a set of responsibilities and costs that don't exist with renting. When you rent, there's no need to worry about unexpected repairs or the hidden costs of property ownership. It's your landlord's headache, not yours. But renting isn't just about dodging the responsibilities of homeownership. It's also about strategic financial planning. For those still building up their savings or dealing with debt, renting provides the breathing room needed to get finances in order. High market prices can make buying feel like a risky move, especially if you're stretching every penny just to make a down payment. Renting allows you to live comfortably while still working toward your financial goals, like paying off student loans or saving for a future home when the market cools down. Ultimately, the choice to rent or buy comes down to what makes the most sense for your current situation. Are you ready for the long-term commitment of owning a home, with all its ups and downs? Or does the freedom and lower upfront cost of renting align better with your lifestyle right now? The decision isn't one size fits all, but having a clear understanding of your financial picture will guide you toward the right choice. So, whether you're leaning toward the security of ownership or the flexibility of renting, making an informed decision is the key to thriving in your financial journey. Now that you've got all the tools in your hands, the question is, are you going to keep dreaming, or are you ready to take control of your finances and make conscious choices? Knowing how much you can really afford isn't just about numbers. It's about creating a future where you live comfortably, without tight budgets or regrets. Ask yourself, are you ready to adjust your lifestyle today to live more securely tomorrow? Think about the possibilities of turning what you've learned into action, making choices that resonate with your reality and dreams. So, will you keep playing by someone else's rules, or start making your own strategies? Be realistic, but don't shy away from being bold in your plans. The path to homeownership doesn't have to be a marathon of frustrations. With the tips and insights you've gained, you can pave a smoother, more secure journey. Apply these rules, do the math, and realize the power to decide is in your hands. And if you want to keep learning about making the best financial decisions, don't forget to subscribe to the channel and turn on notifications. This is just the beginning of a new chapter where the control is yours. Are you ready for this journey? See you in the next video.